Hi, my name is Saurabh Vyas. I'm currently working at PwC in the M&A Tax division. First of all, congratulations on completing your CA final. It is a big achievement, and I sincerely hope that the job you choose allows you to fulfill your personal and professional ambitions. Let me start by explaining what is M&A Tax. For ease of explanation, I'm dividing the topic into two parts, that is planning and execution or implementation. Let us start with planning. If a company decides to acquire another company or a group decides to undergo an internal restructuring, they come to us after they've decided the same so that we structure the entire transaction in the most tax efficient manner. We ensure that the tax implications are minimum. If I take a practical example, there was an Indian company which wanted to shift its value to the US because it wanted to raise funds in future in the US and it wanted to get itself listed on the US stock exchanges as well. So the easiest way to undertake this transaction would be to set up a US corporation and sell the shares of Indian company to the US corporation. But in this case, the shareholders of the Indian company would have to pay tax at the rate 20% at least. So this is not a tax efficient structure. So another structure which we could come up with is incorporate the US company, then incorporate a wholly owned subsidiary of the same company in India. Now the new company would acquire the business of old company either through merger or through demerger or through slump sale or through itemized sale, right? So while evaluating these alternatives, timeline is of importance as well. We have to ensure that the regulatory requirements are fulfilled. You'll have to look at FEMA provisions, you'll have to look at RBI circulars, you'll also have to look at Companies Act requirements, you'll have to look at SEBI if the company is listed as well. So you'll have to ensure the regulatory provisions are fulfilled and the tax implications are minimum. After that, there is execution. So if the company allows us to execute the same, then it is same as what we have learned in the compromise arrangement amalgamation. It is just the practical implementation of the same with respect to the merger, the demerger and all of that. So that is execution. Coming to the interview process, generally there are 4 rounds of interview if you go through an off-campus route. In my case, there were 3 rounds of interviews. First one was HR, which was a general tell me something about yourself kind of an interview. The second one was manager round, wherein 2 people took my interview. One was my manager, one was the assistant manager. And they grilled me on questions with regards to taxation, with regards to Companies Act a little, with regards to FEMA provisions, if I knew a little bit about them or not. So, and primarily they focused a little more on my articleship experience because they too understand that I don't have an experience of M&A tax. I might know the provisions through see a final curriculum. So that is there. After that, there is a directors round wherein the questions were a little personal. There were 2-3 questions about my personal life, and after that there was an open-ended question about tell me something about M&A tax. So at that time there were 2 major amendments in the budget of FY 2021. First one was that you wouldn't be able to claim depreciation on goodwill, and second one was that valuation rule for slump sale was prescribed. I talked about that, and he was quite pleased that I knew about the amendments. Generally, after this, there is a partner round, which is very much similar to the directors round. But in my case, I was selected after the directors round. So what do you need to prepare for these interviews? Firstly, you need to know the M&A provisions from Income Tax Act. Right, 72A हो गया, 79 हो गया. After that, you will have to prepare, valuation rules with respect to income tax. That is Rule 11UA. Goodwill, it's not important anymore, but after that, you would have to prepare for slump sale valuation, etc. You would have to know the compromise arrangement amalgamation chapter from Companies Act. You should know DTAA. Basically, most of the DTAAs are similar. So if you read one DTAA, you will have idea of the rest. The rates and things would be different, but yeah. So that would be sufficient, I guess, and you should be able to answer questions based on your CV. Whatever you mentioned you worked with, you should be able to answer those questions. So that would be all. All the best for your interviews, and if you have any more questions, feel free to reach out to me on LinkedIn. The description box might contain a link to my LinkedIn profile. So thank you.